Yeah, I want to see if you're wondering the same thing a lot of other people are wondering from me, right? They ask me all the time, does inflation affect mortgage rates? And the answer to that is yes, directly does. So let's talk about that for a second, right? So when inflation rises, central banks like the Fed, right, the Federal Reserve, right, the FOMC, the Federal Open Market Committee, headed by Jerome Powell, they meet I don't know, is it 8, 10 times a year, and what they will do is they will raise rates to bring down or control inflation, right? So we had that out of control inflation, especially last year, right, where everything was just going through the roof, right? 9 point something percent officially, right? And they say, well, we want to come down to a target rate of 2%, right? So they started to raise rates and really aggressively last year. Now remember that they're raising the overnight funds rate. That's the rate at which banks loan to each other, right? The federal funds rate, and that was hovering around zero, during the pandemic. And they said, well, our target's 5%. We want to get it up, and I think right now 4.85%. So they achieved that, right? So they started to raise the rates, and of course, it makes borrowing more expensive, including for mortgages, right? So here's how it works, right? Overall, so inflation, as far as inflation and interest rates, so higher inflation is going to reduce the purchasing power of money. So basically, lenders are going to demand higher interest rates to compensate for this loss, right? Because they're going to get theirs, right? Now, when inflation is high, the central banks, of course, increase this benchmark interest rate that I'm talking about, federal funds rate, to slow the economic activity and to bring inflation down. Remember last year, 2 years ago, even 3 years ago, they said, if you're looking to buy a house, don't. Right now is not a good time to buy a house, right? They didn't want to see, because everything was up, was going up in price, right? Just like the groceries at the store, and we'll talk about that a little bit more in just a minute, right? But the remember that the target rate, they said, was in the 2% mark, right? So, well, as of last month, September 2024, the reported rate of inflation was 2.4%. So mission accomplished, I guess. It was the lowest rate since February 2021. Well, tell it to the families that are struggling, to make ends meet, right? Okay, well, hey, inflation's under control now. Yeah, but the cost of groceries has skyrocketed. And by the way, when something goes up, just because inflation rate has come down, don't expect for those prices to come down. They've now reached a rate at which you can expect to see from here on out. And by the way, the idea that grocers are price gouging, I mean, they've got razor thin margins, like 1-2%. So it's not them, right? It's a whole host of things, right? It's the cost of energy, right? It's the gasoline to get those products to market, right? In the 18-wheeler trucks, that gets figured in, stuff like that, right? So the idea that inflation has come down doesn't mean that we won't have inflation. It just means that the rate of inflation isn't going to be quite as high. So by the same token, if you think about the price of groceries is going to somehow going to now come down, again, it's just not going to be a lot more. It's going to be more, just not a lot more in the future. But same thing can be said for houses, by the way. So we'll get to that in just a minute. But right now, let's talk about how this affects mortgage rates. So the mortgage lenders are going to base their rates, partly on the Fed's, benchmark interest rates that we've been talking about. So when the central bank raises rates, then mortgage lenders typically are going to follow suit. by increasing their interest rates on their loans, right, their mortgages, including mortgages, to cover the high cost of borrowing. So that's how that works. So, in short, higher inflation is going to lead to higher mortgages, and lower inflation can lead to lower interest rates. However, remember, there's a lot of other economic factors like economic conditions, supply and demand, right? In the housing market, that's also going to influence mortgage rates. Now, let's remember for a second that if you are waiting for mortgage rates to come down, which a lot of people tell me in Alberta, I just can't wait for the mortgage rates to come down. And if you think that the official, inflation rate, having come down is enough to bring mortgage rates down, because remember the Fed finally, made a rate cut last month. It's against September 2024. And that was pretty significant. I think it was like 0.5%, but mortgage rates didn't follow suit this time. It's about 6.58%, the 30-year fixed rate average right now, more or less, for a well-qualified borrower. And listen, it's not necessarily a bad thing. It hasn't been a bad thing, because they're still below historical averages, dating back to 1971, when they started to track, Fannie Mae started to track the averages for 30-year fixed mortgages, right? And so if you were to look at the average over time, I think, a couple of years back, I figured at 10.76% was the average of the historical rates dating back to 1971. They've actually gone up since then, so it's probably, I don't know, maybe even closer to 11% now, average. And remember that, people have been, chatting online and just surmising for some reason that somehow there's going to be a rate reduction and a housing crash. Well, because we don't live in fantasy land, we know that that's not going to happen, right? Because let's focus on what we can leverage right now, right? Because the idea that there's going to be a housing crash, it's just not going to happen, right? We've seen those prices steadily climb. But again, leveraging what we can right now are elevated days on market, okay, at 62, 63 days on market average in San Antonio, and the higher inventory, right? 5.3 months as opposed to 1.7, 1.9, 1.2 months during the the pandemic and the height of the housing frenzy. Big difference, right? 5.3 months of inventory. And what does that mean? Well, that means that basically, if not another home gets listed for sale in San Antonio, theoretically it would take 5.3 months for us to sell all of the inventory, theoretically. Right? But let's face it, if and when rates do come down, there's going to be a lot of pent-up energy and demand, and it's not going to be a crash, but instead it's going to be another huge demand, I think. Based on my years in the real estate business, I think that people are going to begin overpaying again. That's what I think. Now, that's going to be bad news for you if you've contemplated a move, because now everything's going to be more expensive. Now there's going to be multiple offers, right? Remember, I've talked to you about my perfect home finder program. It's kind of like a just looking program. So even if you just contemplated a hypothetical move, we can go out and use our marketing dollars, no obligation to you, of course, to go find sellers that potentially would sell, right? They've thought about selling in the past. They've considered it. And if they can engage with a buyer, that's you, that I'm working with, that they can sell their home to off market. It's kind of like a glorified for sale by owner, really. They'll represent themselves, or they can hire their own realtor, whatever. but they'll pay our fee, and for having brought you, the ready, willing, and able buyer, to the table. Well, guess what? I find homes for people all the time off market like that. I take their criteria, the must-haves, school district, commute to work, whatever that is, right? Area of town, zip code. And we put our marketing dollars out into the community to help them find that special property they're looking to move to. But guess what? Even during the pandemic, when I was doing that, and I was eliminating competition because there's nobody else knows that it's for sale, right? That's the beauty of the program. And guess what? Even still, in order to entice sellers to sell their house to my clients off market, instead of trying their hand at the open market and seeing if they can bid it up a little bit, what I was doing is I would take the average overpayment. What was that percentage of people overpaying, over asking price that it was selling for? And I was doing my homework, and I was finding out what that average was, and I would tell my clients, hey, look, I really do think we should offer them this much more for the house, right? Just to make sure. Has to appraise for value, for contract price, but at the same time, let's entice them to not want to publicly list it. And then now we've got a whole bunch of competition against us, right? It's always a competition, right? Whether you're buying a home, selling a home, or investing in real estate. So you can afford to buy right now. I think that right now, why don't you consider doing it right now? Let's negotiate a sweet deal for you, right? In terms of price and terms. When the closing would take place. We'll take a contingency if you're required to use the net proceeds for the sale of your current home to buy the next home, right? That's called a home sale contingency. If you need such an arrangement, then you know what, in my experience with my Perfect Home Finder program, they're more than willing to allow you to do that. They're not even going to question it. It doesn't become an issue. It's only an issue whenever you're in the public market and their realtors, well, what about this and what about that? And then they can go get a realtor that give them that advice. That's okay. It's just that this is also a convenience for them. This is a convenient way to sell. So they're going to be more likely to accept your home sale contingency that we're going to try to negotiate for you, right? And listen, let's help you find the home right now when they really need you. Again, those elevated days on market I'm talking about, right? Right now they need you. Let's not wait until they can take their pick of buyers, right? In the future, whenever things, there's another frenzy generated, and they've got buyers left and right, vying for their home, frankly, they're not going to need you as much. So they're not really, or for that matter, let's negotiate. Well, remember that I always talk about this. There's two negotiations, principal negotiations. It's first one's price and terms. Second one are repairs. During the pandemic, can I tell you, people were like waiving due diligence periods. They're saying, well, I don't need an option period. I'll inspect the home. I'll buy it as is, truly as is. That's a bad way to go. Because you don't want to do that, and then what if there are things that are materially wrong with the property, and now you're on the hook to get those fixed. That's what happens when you get heightened competition for a house. Instead, let's do the right thing. Let's buy the house now, if you can afford to. Why not do it now? And then, if and when rates come down, then you can refinance. Right? Date the rate, marry the house. Like I've been saying for, I don't know, a couple years now, right? Because when you work with me, listen, I'm not going to let you buy the house without having it inspected. I don't just suggest that you inspect the home. I insist upon it, right? I'll never forget, quick story. Los Angeles Heights, 78201 here in San Antonio. The homes are typically, a lot of them are built on pier and beam, 1940s construction, 1930s, 1920s, and they're older homes. My buyer says, I don't want to get inspected. So, why not? I just don't see the value in paying for an inspection. I said, ma'am, it's $350, $400 maybe on the high end. Yeah, I don't want to pay that. I said, okay, let me pay for it, and let's just see what's going on with the property, right? Because then it was the main house, and it was a like casita or whatever in the back that was being rented out. So we had it inspected. Sure enough, there was a hole in the roof. It was leaking like a sieve. Every time it rained, I said, so we renegotiated a brand new roof for her. She was so happy. She said, let me pay you back at closing. I said, don't worry about it. It's just, I'm just glad that it worked out for us. And guess what? You know, she and her husband they're also investors. So they bought like a couple investment properties with me already. And every time something comes up, they love Los Angeles Heights. Every time something comes up that they want, you know, my guidance on, you know, they'll reach out to me again, you know, to either put in an offer or to, you know, give them some guidance on comps and stuff like that, you know. So it's the right thing to do to help people out. Anyway, so why not buy a house now? And then again, if and when rates come down, then you can always refinance. So the only shopping you're going to be doing is shopping for a refinance loan, not shopping for a house with everybody else, right? So, and remember, this Perfect Home Finder program is of no obligation. We're not going to be all salesy and stuff with you, you know, and hounding after you. We're only going to contact you if and when we find a home and preview it for you to make sure it meets your criteria. Then we'll bring it to your attention, and only when that time comes, because when we preview it with the seller, we bring empirical data to show them what the home should be sold for. So we're not looking to steal their house. It's got to be a win-win. Excuse me. And so we want to show them data that this is what your home is going to sell for. Even if you listed it with me or something, I would advise you the same way. So it has to be fair. I represent you, obviously. My representation is with you. We would talk about that, and how we negotiate that the seller still pay it, even with, you know, the August 17th change with the NAR settlement and all that. We would still ask for the seller to pay for that. And again, it's a convenience, so they'd be more than happy to pay for my brokerage's Santino Properties LLC's compensation. So that's it for now. Hopefully you enjoyed this video. I wanted to talk to you a little bit more about the correlation between inflation and mortgage interest rates. Hopefully you found this video helpful. What I'd like for you to do is I'd like for you to reach out to me if I can answer any questions you have. 210-376-TALK. So it's the San Antonio area code 376-TALK. And in the meantime, be sure to like the page and sign up and subscribe. Sign up for alerts, so that when I go live, have new content, you'll be alerted to that. We do this as an education for the public. This is all educational content with all that sales stuff. So hopefully you found this interesting, and let me know what questions I can answer. I'm Realtor Bert Tade. I'm broker owner of Santino Properties LLC. Have a great day. Thanks for watching.